had a neighbor call and say, "Hey, somebody's got a flamethrower." They're
Oh,
like, No, no, what? Come again?" So we go we put Ring cameras on the outside. You're not allowed to put them on the inside. Full disclosure, we're not gonna put these
thank
rules, but
God.
so we look at the outside Ring camera, and sure as hell, there's a guest standing on the stairs because it was like a two-level home on the top balcony with a hazmat flamethrower, Elon Musk-esque thing, just going like this. And of course, if you're above the fence line on the second floor, the neighbors can see it. It's above them.
Welcome to the Xplor Show, where we dive into the worlds of entrepreneurship, real estate, and motivation. Each week, we bring you inspiring conversations with people who are exploring new frontiers and shaping the business world. Thank you for tuning in. Now let's get to the show. Hey, welcome back to the Xplor Show with Scott and Ryan. Scott, good to see you.
Ryan, you as well. Pretty excited today for our guest.
Yeah, we have on Taylor Jones, Mr. Jones STRs, as you know him on Twitter with a big Twitter following. Taylor, thank you for coming on.
Thank you, fellas. Appreciate it.
Yeah, hey, so we're switching things up here. We want to switch our format of the podcast and really get into the meat and potatoes of what you specialize in, which is luxury resort style short-term rentals. Why don't you just tell us about that and what these properties are and why they're so unique?
Yeah, certainly. We found a great niche of taking what is a average property that could be legally used as a short-term rental based on the zonings and the permits. And we're going to try to throw more amenities and more design at it than any of the competition in that market. So for us, we're spread out throughout the US. We're in 8 different states today with our investment portfolio. For us, we're looking at it from the perspective of how can we be different? How can we be unique? Because being different allows you to charge more money and drive more revenue. At the same time, you're going to attract more guests and you have a very visual product. And for us, we're just breaking down what does it take to win in this market? What do our competitors have? Once you figure that out, that's the starting place. Now we're like, okay, what 2 or 3 things can we add to be different, stand out, and ultimately drive more bookings?
Yeah, I love that, Taylor. One thing, I've been not a guy against Airbnbs by any means. I think that Airbnbs have become this almost a buzzword in a lot of places, and there's a lot of lies and false information that goes around the internet, in my opinion. When it comes to Airbnbs and short-term rentals, everybody talks about how much money they make and how easy it is and this and that. And the reality is, would you agree it's not as easy as everybody makes it look online?
So the reference I would use is back in 2019, you could have closed your eyes, grabbed a dart, thrown it at the map, and whatever you landed on, you could buy it and probably deliver a 10% return or stronger. That was quote unquote when it was easy. Unfortunately, what is a lot of the guys pushing courses or pushing education and how easy it is, a lot of them bought in 2019, 2020, maybe 21. There's not a lot of those public figures who are actually buying within the last 6 to 12 months. Us, on the other hand, I can tell you exactly the difficulty it is to navigate because we've bought over 100 short-term rentals here in the last 16 months. As far as the current landscape, when debt rose and got more expensive, it quickly wiped out the OEs. At the same time, supply increases because everybody jumped in assuming it was easy. Now it's a little harder to stand out. And I think what, used to be, oh, I've got a 3-2 vinyl siding home in flyover country America. Yeah, of course you were going to get booked 2, 3 years ago. Now, when 10 other people in your neighborhood who also have a 3-2 vinyl siding home in flyover America, it's, oh, why am I getting any bookings anymore? And if you don't have anything to be distinctive in your property, you're just not going to get bookings. It is very difficult in today's business. I don't think a lot of people understand how to navigate the data, the regulations, the opportunities. So yeah, I think that ship sailed a couple of years ago. You're seeing people exit the space who got sold a bill of goods online from their favorite guru. But yeah, you can pretty much go look at my content. I never talk about how easy it is because it's not. This is very hard.
Yeah, no, and your content's been amazing on Twitter, especially. And we're going to get into that. One thing that you just mentioned, regulations. So that's an interesting topic when it comes to short-term rentals. Dallas, there's big news this past week that Dallas just passed new legislation or new policy there to ban short-term rentals in, I believe, single-family areas. When you guys are going to new markets or in any market, whenever you're looking to buy, what zoning are you guys looking for? Because here in Kansas City, the same problem. Last month, the city of Kansas City passed new policy saying anybody that is in a single family zoned area can no longer have short-term rentals unless they had previously been permitted and running their operation as if are with the city.
Yeah, certainly. Big things we look for, A, is it legal? I think what a lot of these places, like you said, is there was no regulation, there was no rules. We like going to places where the rules are established, there's already rules set in place, and you know how to follow. If they do ever change the boundaries, typically they're going to allow that for you to stay within the space. So you don't typically run into that rule of, oh, it was legal in this area and you were permitted, you were up on the up, and then now all of a sudden you're not. Number two is, are they collecting taxes on it? So let's call a spade a spade. The government likes money. So if they are actively collecting money and they've put in programs to collect money off short-term rentals, it's going to be hard to get rid of them. Great example I give is up in Blue Ridge, Georgia, small little Fannin County. It's only about 16,000 residents there, but there's over 3,000 or 4,000 cabins, vacation rentals. Was talking to somebody at the tax office. They said that they charge a $5 per night booking fee, a lodging tax that goes to the host. They collected over $5 million in just lodging taxes last year in small little sub 20,000 Fannin County, Blue Ridge. So to think, oh, is Blue Ridge ever going to outlaw or ban short-term rentals? You might need to call yourself crazy to think they're going to give up $5 million from the government's line items. Again, those are things we look for, because when a government takes a stance like that, where they're going to start collecting, most will do a percentage of revenue or add on an additional lodging tax. They're really not going to ever get rid of that lodging tax. They don't want to hurt that line item. They get used and accustomed to having that money in their budget. And I haven't met a government that's ready to cut their budget anytime soon.
It's just like the theory when I say this all the time to my clients, especially right now here in Kansas City, property taxes just went up again in Jackson County, and they went up significantly. People are up in ears about it. And I tell them all, hey, just get used to it, because they're never going down. No matter if the market declines downward or anything else, those are staying where they're at, because the city is now, like you just said, accustomed to that line item. They aren't going to take less. Now, you can fight it in a down market and get them to reassess it, but it just takes work, and they're not going to announce that out to the public. So only the savvier people are going to be able to actually benefit off of that. In reference to Kansas City again, let me ask you this. So you made a point of that $5 per night transaction fee, and Kansas City just passed essentially a hotel tax on short-term rentals. Same similar concept where it'll be a small fee per night per stay. And $28 million, I believe, is what the revenue that was brought in this small market of Kansas City last year in 2022. And the reason they're pissed is the fact that, like you said, there's people that aren't paying that tax. We had roughly 1,800 short-term rentals in the city. Only 340 were licensed and permitted to actually be operating as a business. So they're losing out on $20+ million. So my question for you there is, if you were looking at Kansas City and you were already permitted, locked in, what would be the benefit of staying here? Or how are you guys assessing and analyzing the data to know, hey, this is going to continue to be a market? What tools are you guys leveraging to know what areas to be in, to go to, and so forth?
Yeah, so we'll pull data from a couple of the big data sources that are out there, AirDNA, Rabu, et cetera. That's a lot of good decision making for whether to enter a market. Once you're in a market, though, nobody's data is better than your own. So the great thing about the scale is, now that we have 5, 10, 15, maybe 20 in a given market, we know exactly how 3 bedrooms should be performing that have XYZ amenities. We know how 4 bedroom, 5 bedroom, 6 bedroom, et cetera. So as we start honing in our own data, we really start seeing what works and what doesn't. And then when we do have a dozen or so properties, you can also test things out. So you could try, hey, maybe if we put a hot tub in over here, let's see what additional revenue we can drive, all things being equal, versus not. And then you can give it 3 to 6 months, get a sample size, see what bookings are tracking, is ADRs up, et cetera. And if that's the case, you're going to go place a bulk order from Costco and you're going to order hot tubs for the rest of the supply that you have in that market once you found it works. So that's kind of the great thing about us scaling is our own data is going to really give us the best use. And then at the same token, for whether to stay in a market, we'll be able to see how we're performing. If we're performing average or below average, whatever it might be, then we'll just stop buying in that market, whether that be short term or long term, just depending on the data. If it picks back up again, then sure, we'll continue to buy. But if it continues to stay flat or stays down, that's where it doesn't make sense to continue to funnel dollars into there. But for us, ultimately, it's just staying very disciplined to the data. There's no emotion. I roll my eyes and laugh at those like best places to invest or best Airbnb markets in the country, all those lists and news articles that come out. So ultimately, I'm sure people are either paying to be in there or
Yeah.
something, but like, there's no data that shows any of this is worth a lick. So we just put our head down and stay disciplined to the data, and we follow that to make our decisions.
So
Love that.
I do want to back up a hair just to paint a picture for people when we're talking about these resort style Airbnbs. It's not just a pool and a hot tub. They're, yes, they might have pool and hot tub, but we're also talking putting greens, horseshoe pits, basketball courts. Inside the room, like the game rooms are themed. There'll be arcade games, Pac-Man's on the wall, crazy painting to where I'm sure people just go there because this is gonna be cool to take pictures in. These are very high end, like very cool looking Airbnbs. It's not, they're just not slapping a pool in the back and calling it a day, just to
Yeah.
give context.
Yeah.
One
No.
that you posted last week, Taylor, was and I don't know that if you guys have a name for it, but a women's house where they had pink cabinets and everything was geared around women or get together for women. Tell us about that house a little bit.
Yeah.
What brought you guys to do that?
Yeah, so we looked at the data. That's in a nice bachelorette heavy market. So you want to serve that niche. Women will pay more for a custom theme niche. And if you're going after any niche, if you're going after hikers, if you're going after couples, if you nail everything directly to that niche rather than trying to appeal to the masses, you'll actually not drive the same revenues. We went all in. We painted the cabinets pink. There's pink appliances, a pink Keurig, pink toaster. We specifically target and want bachelorettes to book, and they book at a premium. We're getting 16, 18, 2,000 a night for that property. And of course, when you spread that out amongst 12 to 16 women, it's not that big a deal. But for us, like, we don't care if 2 people sleep there or 12. We went all in on the bachelorette theme. Of course, we couldn't leave the dudes hanging. So we actually built a bachelor house. It's got poker table, huge pickleball court, basketball court, the miniature golf. But then all of the bedrooms are dude themed bedrooms. So what I mean by that is there's a Back to the Future room. There's a Godfather themed room. Let me see here. We have a Happy Gilmore themed room. We have Step Brothers themed room. And we have a Fight Club themed bedroom. So dudes come in there, they look at this and they're like, oh, this is great. You got the Godfather mural or the Adam Sandler Bruins jersey, Happy Gilmore with golf clubs all around. So that's, of course, what draws. And the reason that one and like dudes booked out, yes, the theme is good. But if we didn't have all those amenities in the backyard, the pickleball court, the basketball, the miniature golf, the cornhole, the billiards, we have a poker room. There's 4 flat screen TVs, so they can watch 4 different games. They can play cards. You really want to nail your niche with those amenities. And again, that place also is getting 16, 1,800, 2,000 plus a night, and 10, 12, 14 dudes are just booking it together.
Taylor, tell me that there are bunk beds in the Step Brothers room for
There is. So literally, in order to get to that level of occupancy, you either have to put 2 beds in a room, which we do have some of those, but there's also a bunk bed room with 2 sets of bunks. And that is, of course, the Step Brothers room,
Yes.
because it would be the most appealing thing is having that.
Nailed
That is
it.
awesome. What's the premium to do this? So when it comes to your cost on your end, what kind of premium do you guys see cost wise to doing this to these properties, but then also premium on the return side? How much of a premium are you guys getting compared to a traditional Airbnb you've got?
Yeah, so I'll walk you through a couple like sample properties we've done. There was one we did, so it already had the pool and the fire pit, but we put an outdoor like basketball / pickleball court. We did an outdoor bowling alley, the cornhole, a miniature golf area, horseshoe pit, throwing all that together, turfing it, spend somewhere in the neighborhood of 80 to 100,000 just in the backyard. Six-figure purchase there to add all that in. The plain, oh, we have a swimming pool and a fire pit only, and maybe a couple cornhole boards. Where if that's our competition, and then we come in and spend all that extra money, we're getting between 40 and 60,000 in top line revenue increases compared to those properties. So when you look at it from an ROI perspective, it pays for itself, hand over fist. On top of it,
Yes.
there's the measure you can't look at, which is, yes, we're driving more revenue, but you can also say, man, if there ever is a downturn and everybody has to start dropping price, visually, is somebody going to say, oh, which one do I want to stay in? Visually, we're doing there. What's really cool with our size, we have a dedicated Airbnb rep. So a lot of the OTAs, once you get enough scale, they'll get you your own rep. When we look at like how many views your property gets, what your conversion rate is, these are a lot of stats Airbnb gives hosts. And I see in the Facebook groups, they're like, hey, how's your conversion? How's your this? So our Airbnb rep told us our properties are averaging 4 times as many views as anybody else in the local market. And when you talk about visually appealing our product is, that's a strategy in itself. Is if 4 times more people are booking at it, even if we have a less booking conversion rate than our competitors, we're going to statistically get more bookings just because we have more eyeballs on our property. So for us, as we scale more, it'll just continues to allow us to grow, execute. I tweeted out one time, of the 15 listings on page one, I just did like an incognito search on Airbnb in a different account, and 6 of the first 15 on page one were ours. And I joked,
That's
man,
pretty cool.
there will be a day where we're going to own all 15. And at that point, like, you don't care. Like, they pick anything on the first page. You're like, awesome, we're making money. And then that one goes away and it's cool. Now you got 14, the other 15. So, yeah, that's like the great things about scaling versus owning a one-off property is there's so many levers you can pull because of scale in this asset class that nobody's really taking advantage of. And we're just slowly starting to implement them.
So what's one thing that I guess I want to ask you about? It's genius what you guys are doing, in my opinion. So you look at tax benefits. Exterior landscaping is 100% bonus depreciable.
Yeah,
Year
no,
one.
we
Well,
cost
80% starting this year. But now we're
yeah.
talking cost segregation. So you guys are able to depreciate, just say this year you're buying the property, 80% of what's happening on the exterior. So yes, you're spending a crazy amount of money, but you actually benefit on the back end of it. And Airbnb, even the interior products that you guys are putting in there, those are able to be bonus depreciated, aren't they?
Yeah, I mean, we're doing cost segs and depreciating every property that we buy. And the great thing for investors in our fund is that they get all of those tax benefits flow to them on a K1. So
That's huge.
great is that on your investment, you are getting not just the returns themselves, but you're also getting those tax benefits that a lot of investors want to utilize.
That is big. That's awesome. Yeah, that's really smart. Spend all that money on the exterior, make them really cool. And that's what sells those properties.
Are
Holy
there
cow.
is there a single amenity or maybe a combination of one or two that really help attract attention? Pools, I feel like a lot of people have pools. Is it the pickleball courts?
Ryan, what do you think it is? Let's hear a guess here.
I think overall it'd be the theme is what pulls people. But if I had to pick one, I would say the basketball pickleball court would be the biggest attractor besides like,
All right. Let's hear from the professional here.
All right, so I'll go simplest to 4. You nailed it. So there is a distinct difference in most markets, like a Florida, like in Arizona, like a Texas, where it is hot. Depending on the state, a home with a swimming pool versus not is going to command anywhere from $20,000 to $50,000 more in top line revenue, all
Okay.
things being equal. So right out of the gate, not having a pool in any of those markets that are quote unquote hot, if we're investing in the north or the northeast, pools are not a required, they're a bonus. But that's like a non-starter. So we won't even touch anything without a pool because your top line revenue is capped. If we had the best looking amenity filled themed home, but we didn't have a pool, we can only drive X amount of revenue, and somebody with a pool with worse design and less amenities would still be able to catch us. So if you really want to capture what is the top of the market the most, you need to have that. With the rise of pickleball, we are seeing great premiums that we can command. So as far as being like the biggest bang for the buck, that is number 2. And anybody that's got a quarter acre, a third of an acre, half an acre, multiple acres across the US, and you have a short-term rental, I would highly consider putting one in because the returns on those things are just through the roof. And however long this trend of pickleball runs, we're going to ride that wave because people absolutely love it.
What's a pickleball court take, as in cost, but what kind of dimensions are we talking for somebody that would maybe want to do that? Could you do it in your driveway even possibly?
If you're at an oversized driveway, and I don't pretend to be a professional, I've played casually, but am not a regular where I know. But if you had an oversized driveway, obviously you would need to be flat. You could probably pull that off. And you could do it a couple simple ways. If you do have available concrete and you've got enough dimensions, you could do as simple as striping the concrete. That's going to be your most affordable. I already looked, you can go get a net on Amazon for 75 bucks. So really cost to do it. Some of ours where we do the sport court material, it's colored, all of that. A lot of those can run you 15 to 20 grand to do it right. What I tell people is, yes, hey, that's something we're going to do because visually it's good. It's blue, it's red, it's green, it's whatever color we pick, and it's going to hold up. But even if you have that concrete pad and you're like, hey, how can we purpose this? That's really what we're after. And I think a great theme for a lot of your listeners is look at every square foot in your house. And when you talked off the top about, man, you guys have so many amenities, we really look at every square foot. If we left this as grass or left this as concrete, how much revenue is it going to drive? If we convert it into ABC amenity, what's it going to do? For example, garages are pretty worthless in Florida, Arizona, a lot of the South for short-term rentals. So we've converted garages into game rooms. We've converted them into home movie theaters. Anything you can do, you want to leverage. So if you have a concrete pad, it's probably generating $0. But even if at minimum you just put a basketball court up there, that's going to give you a return. If you want to spend more and you want to paint it out, you're going to get an even deeper return. If you cover that whole thing with sport court material, your return is going to continue to increase. We look at every space. And I'm like, what can we add here? Can we add a giant Jenga area? Can we add a bocce ball? Can we add a horseshoe pit? Can we add XYZ? And a lot of times too, you just overwhelm the customer. They look and they're like, there's 9 things in the backyard. That backyard, it has a pool too, but it only has 3 other things. Like, we're just going to go book the one that has 9. So a lot of times we just overwhelm them with how much stuff there is. And they just start emotionally testing. You draw them in emotionally. And they're like, oh man, my kids can run around and play this. Or all the dudes are like, yo, we'll have a pickleball tournament and then we'll get our poker game on. We can watch the Masters. We can boom, boom. They're already sold. Even if they haven't gotten to checkout where they're like, oh man, we're paying $1,800 a night. We're coming in for the week and we're going to drop 5 Gs. It's an afterthought because they've emotionally already sold them on the property because of how much cool stuff there is to do as a group or as a family.
So you guys are a hospitality company.
Anybody in short-term rentals, I try to tell people, you are not in the real estate business. You are buying a hospitality business that just so happens to be wrapped around a piece of real estate. A lot of people get confused, and I think they get sold that bill of goods that we talked about earlier. Oh man, I'm getting into real estate. I'm getting into short-term rentals. No, you're getting into a hospitality business. When a guest is hitting you up on Friday night at 4 or 5 o'clock because they can't check in because the code doesn't work or the Wi-Fi went out, and you thought you were cool with your automated check-in, and now you're sitting there at happy hour with your significant other or with your buddies. Now you got to go step aside and deal with that. Otherwise, I guess it's going to crush you in your reviews, which is going to hurt your future bookings because, oh, now they can't check into this home that they've paid for. So, you're signing yourself up if you're going to be in this business to be on call 24/7. Even if you hire a property manager, stuff will go wrong that's above their pay grade. Hey, your dishwasher's gone. Your property manager is going to have to come to you and be like, hey, which one should we order? I don't know many people who just trust their property manager to pick a new $500 or $600 dishwasher on their behalf without trying to take a look at it. So those are things that people really misunderstand with this asset class, is that it's a hospitality business wrapped around real estate.
It really is. We learned that pretty quickly when we started doing a few Airbnbs. Again, we're here in Kansas City and we manage our own properties, do all this, but very quickly we learned that almost every time somebody was checking in, it seems like either they're hitting you up at the very last second when something's already on fire, or they need help, or they lock themselves out. There's so many things on Friday and Saturday that you're dealing with that are just unknown. You never know what somebody's going to hit you with. And there have been some crazy things that people have messaged us about and needed help with. It is a hospitality and customer service business.
And as a customer, there's nothing more frustrating than you get there, you can't get the door unlocked, and then you get in there finally and the beds are crap, or you want to cook something and they have one really old crappy pan and two plates, and you're just like,
Yeah, we stopped
what are we
staying at
doing here?
Airbnbs because of this. So I'll be honest, my fiance, she used to be all about it. And it actually used to be somewhat reasonable. A lot of Airbnbs have got a lot more expensive once you put on the cleaning fees, everything else. Hotel prices seem like they've come down. But the last Airbnb we stayed in was in Miami. And I'm not kidding you, the rags look like the wash rags look like they had come out of an oil shop. They were so just dingy and disgusting. And it made her so mad that I think we actually ended up leaving the second night and just going to get a hotel room because she was so grossed out. And it was sad. Am I wrong in saying, Taylor, when it comes to Airbnbs, it doesn't really make sense necessarily for if you're just going to get like a 1 or 2 bedroom. It's more focused and beneficial to do these bigger properties where bigger groups can come together or families can come and meet. Is that an accurate thought process?
I think that's where the trends are going, because ultimately, if somebody's looking at, do I want a 300 square foot hotel or do I want a 3,000 square foot 5 bedroom? It's not even a competition. If you are in the 1 bedroom Airbnb space, your competition is hotels. So you need to know exactly where you benchmark. That story that you told, and tons of other people have similar ones. That's what I push back on. I try to clap back and call out, and sometimes it gets tempting, and I need to watch myself. Anybody who promotes, oh, it's easy and everybody makes money in this asset class, that's problem is not everybody's cut out to be a hospitality person. Even if they bought it at the right basis and they put the right amenities in, there is not a lot of great operators. And I think what's frustrating to me is if they have a bad experience with you as a host, they're probably not coming back to the platform, and they might not ever book with me to make more money. So
Yep.
I try to discourage people who are just trying to dip their toes in to make a quick buck, because I'm like, that's not how it works anymore. And so anybody who tries to sell a bill of goods because they're promoting some education product, which is where they're making their money anyway, they're not making money in actual real estate anymore. Those are the people I call out online and call a spade, because it does do damage. And people are like, man, you give away so much free content. Aren't you worried? I'm like, not really, because to me, a rising tide lifts all boats. If people can
Yes.
understand how to be a better operator or set up their listing better from something that I have shown them, then great. Whenever somebody books their place, that's a better guess, that experience. They're more likely to come back to the platform, and maybe, just maybe, they're going to book one of our properties, and it just keeps that cycle going. So for us, that's kind of what's most frustrating, is all the people who are dipping their toes. I do think right now cream is rising to the crop. The industry is kind of shaking itself out. We just look at it as we're just going to continue to plug away, and there will be some people that'll leave, and it's probably for the better, in all honesty. So
I love that you're coming from abundance and out. There's enough to go around. That's what I try to tell people all the time. In any business, really, there's enough to go around to where it's actually, you're going to end up doing better a lot of the times if you're helping people be successful. Because guess what? Now I guarantee you're getting people to bring you deals all the time, or opportunities that you probably wouldn't have ever had if you weren't providing this information out there on Twitter or wherever else you're providing all of this.
yeah, and being an elite operator, we can hand the keys over to another operator, same property, and revenue could be down 10, 20, 30%. For us, that's really, we have a great revenue management team and an asset management team who's really diving into the numbers, the booking lead time, the occupancy, setting our pricing. We're making adjustments every single day. We're in the weeds. And not a lot of people have that, especially if you have 1, 2, 10, even some of these big property management companies. We've bought a couple existing STRs and just completely turned them around. I think our biggest turnaround, we took one that was generating 152,000, and we ended up finishing our first year of ownership at 205 in top line revenue.
Wow.
So just a massive turnaround. So again, 152,000, all things being equal, that wasn't a bad short-term rental. It was a decent operator. We just saw the opportunity. They were selling it because they were frustrated. And to us, it was a huge opportunity to be like, man, you have a great product, you have a great space. It already had a pool and a playground set and the ping pong. It already had a lot of great bones. We're just like, man, so you just need a better driver on the ship. It really just needs a better captain. So we've had a couple of those turnarounds that we've done. And I think as we see other operators who exit, if they have the good bones and a good asset, we'll probably swoop in and try to grab those over the next 6 to 12 months as they come available online.
Tell me if I'm wrong, but property manager that's managing short-term rentals is not equal or comparable to a guy that is doing managing long-term rentals. It's a whole nother business. Like we said, it's more of a hospitality. So when I hear some clients or other friends or people I am around telling me that they've got a property manager that manages their long-terms and their short-terms, first thought I always have is, oh, they're probably not getting nearly what they should be getting on these short-term rentals. It's a whole nother ballgame.
Yeah, there's so much meat. And what I look at that is you could have a near 50 to 100% difference in property managers with short-term rentals. What you'll never have is that large of a spread with a long-term rental property manager. And here's like the best example. Let's say you've got a 3-bedroom in a nice metropolitan city and quote unquote, the market rents for that apartment are $3,000 a month. If you're the best of the best property manager, leasing agent, marketer in the world, maybe you can extract an extra 10% and you could rent that for $3,300. What you can't do is get a 50% increase and be like, man, I'm going to lease this for $4,500 a month. That just doesn't exist in long-term rentals, even if you take the best of the best and the worst of the worst. If you take the best operator in that same market with short-term rentals and put them up against the worst or middle of the road operator in short-term rentals, that spread will be significantly larger than 10%. It'll be north of 30 for sure. And it can definitely be in the 50 to 100% range. I gave you that one example. We've had so many turnarounds where we've increased gross revenues. You're 100% right that there is money left on the table by people thinking, oh, I've got this guy, he's taking care of it. There's really a lot of meat on the bone.
What do you think makes you guys such a good operator?
It's really having the disciplined team that we do. If you're a one-off operator, you're having to wear all the hats. You're having to try to acquire it. You're having to try to renovate it. You're having to try to design it. What's really fortunate is we have everybody on the right seats on the bus, and everybody works on what they're really good at. So I lead our acquisitions team. To me, I'm a washed up baseball guy. So looking at numbers, pro forma, underwriting, comps, it's just looking at numbers and comparing them at the end of the day. That's great. You do not want me designing our homes. They would not look that as visually great. We wouldn't have the views that we do. After it leaves my team, then it goes to the construction management and project management team. Again, I'm not a construction guy. You don't want me overseeing a floor renovation, a paint renovation, a kitchen renovation. It's not going to go well. And talking to contractors and subs, et cetera. Same time, when it leaves that team, it goes to the design and they're picking the wallpaper, the colors, the bed sheets, all of that. They're really good at that. And then when it comes to the actual operating, we've got the 24/7 guest communication. They're handling the guest side. But then it's really having somebody who's doing revenue management, who is in the dynamic pricing every day, somebody who's looking at the property, looking at the calendar and saying, okay, how are we booked out compared to the market? How are we booked out compared to our underwriting? How are we booked out compared to our break even for this month? We've got a mortgage, utilities, insurance, XYZ. Our break even is right here. Where are we at compared to that? Can I add a couple bookings at a discounted rate because all of this is above break even now? So there's so many different analyses in that. If you're an individual operator or you're a small team, you're still having to wear multiple hats. Whereas here we have the right people doing the things so they can wear one hat, focus in 100% of their efforts on it. And then if everybody's doing their best output, when you put that all together, you just get an insane operational success. And that's what we have with our team, our infrastructure, which is why we chose to go vertically integrated. So we own every piece of the puzzle along the way versus outsourcing it and hoping for the best.
So you're the acquisitions guy. So if we can talk about that a little bit, the market currently is pretty tough. Interest rates are high. I know you guys, you raise money and stuff, so you might not get lending necessarily all the time, but are you guys still finding deals out there, or are you able to be a little more aggressive because you get such a premium on your properties?
Ryan, I don't know if you follow his Twitter much, but the man just said they made 10 offers this week, I think,
I
and
know,
they
yeah.
lost 10 offers already this week. So yes,
Yeah,
they are making offers.
we definitely are. And to your point, though, like it is still difficult, but we are still finding data because of our data access. And I think we take in more data inputs than arguably anybody in the space. So we took all the listings that hit the MLS, realtor.com, Zillow, whatever. We embedded them into our own software. And then what we do is we underwrite them in real time against data points, occupancy, revenue projections pulled in from places like AirDNA, Rabu, et cetera. So what we're able to do is look at where the money's being made versus the purchase prices. Because if a property can gross 100 grand in revenue, if you got to pay 800 grand to buy it, that's not a great spread. But if you could do that same 100 grand in revenue and you could buy it for 500 grand, that's a great spread. At the end of the day, this business breaks down to two simple items, and that's purchase price versus revenue. So, a lot of us who are deep in the space, we'll talk and I'm like, hey, what's your price to rent ratio? Which is just literally gross revenue divided by purchase price. And you're going to get a spread. So, if it grosses 100 grand and you pay $1 million for it, that's a 10% spread. So, everything's going to
It's a
break
cap
down.
rate, guys. For people that don't know, that's the cap rate essentially.
Yeah, it's really just it's a quick thing of what's the purchase price, what's the revenue, and if you have a large enough spread, so as interest rates climb, that spread gets higher, meaning all things being equal, you need to have a larger spread versus when interest rates were lower. If you can keep your costs in check, that'll also allow you to buy at tighter spreads where your ratio is a little smaller. So for us, we just try to go find places where revenue is high and purchase prices are low. Gives us the best spread, gives us the best opportunity. And then to your point, we also look at, can we extract more revenue than the current marketplace? If you go to a very established market like a Joshua Tree, like a Disney, it's going to be really hard to go set the new comp on the top end. I love going into markets where everything's still plaid drapes, grandma's house from the 80s, because even if all of those are generating 70 grand in revenue as a 3-bedroom per se, what I know is that if we come in with our design, our amenities, we're going to be able to get XYZ premium above that. So to your point, yeah, everybody else might look at it and be like, man, I don't know if we're going to be able to generate more than 70 grand because that's what everybody else in the neighborhood's doing. And they might only be able to pay X for that property. We could come in and say, cool, I don't mind paying 5-10% more because I know that we're going to generate 20, 30, 40% more in revenue here because of design, amenities, execution, et cetera. So yes, those opportunities do exist for us. And that's why we're continuing to scale and grow, because we do still see those opportunities to cash flow and find good properties across the US and continue to expand our geographic reach.
So
When it comes to your buy, go ahead, Ryan.
do you guys have for your team, hey, we want to get this many properties under contract, or is it just if it's a good deal, let's put it out there, or do you have like numbers that you try to hit every month?
Yeah, ultimately it is all based on capital. If we don't have any money to buy anything, it doesn't matter if there's a 20% return laying on my lap. But if there's no money to buy it, you got to let that one go by the wayside. Ultimately, we'll raise money, pool that money together, buy the property, renovate it, design it, furnish it, and then start cash flowing it. For us, we are continuing to raise money. The more money we're able to raise, the more we are able to buy, so that we do see those opportunities come across our desk. We're able to go out and execute. Ultimately, when you do raise money, you don't want to sit on it, because the longer you sit on it, the returns accrue and time is your worst enemy. So for us, we do try to identify good cash flowing properties within 1 to 2 weeks of that capital coming in, so that we can ultimately go in, deploy it effectively, efficiently, and deliver those returns as quickly as possible. So yeah, we're still seeing stuff out there. You have to expand your geographic buy box. That's why we're not in one market. I think it'd be really hard to stay in one market. There's low inventory everywhere. So that's why, again, we're in 8 different states across the US. And ultimately this year we've got 1 or 2 more states that we've been tracking for the last couple of months where the data has been looking strong. So if it stays up and we continue to raise more money, we might enter 1 or 2 more states this year.
We're going to get into the raise and investment side here in 1 second. Before that, what's the meat and potatoes on your buy box? Obviously, it's a little different per market, but are there certain criteria on a house? Does it need to be more than 3 bedrooms or bathrooms, or You guys just whatever works. If the gross return and the price come and give you a 20% return, are you guys going to jump on it?
Yeah, we do own everything from 1 bedrooms all the way up to 6 bedrooms.
Okay.
It is dependent on that market. Each market might dictate something different to you. If you look at a place like, say, we'll go back to Blue Ridge, 40% of every listing on Airbnb or VRBO is a 3-bedroom cabin. So almost half of every product is 3-bed. So I can tell you what I'm not wanting to buy if I'm going into Blue Ridge is a 3-bedroom cabin, because almost half of every listing is 3-bed. You go look at a place like Branson, Missouri, a little closer to your neck of the woods, similar stat, 2 bedrooms, and there's a ton of condos there by the lake. 2 bedrooms make up, I think it's 38% of every listing. So in the same space, I would probably not touch a 2-bedroom with a 10-foot pole if I'm going to go into Branson. So we just look at those opportunities. Here's another good one, just really painting the whole spectrum. If you look at Nashville, Tennessee, so a 1-bedroom on average last year generated about 42,000 in revenue. A studio generated 41,000 in revenue. So virtually the same. So if you're going to go in and buy a 1-bedroom, I could tell you're probably overpaying and you should have just bought a studio, because your revenue is virtually the same from an output standpoint. These are the data things we look at. So we don't go into a market and be like, man, let's go buy all these 5 bedrooms or 3s or 2s or studios. The data will point us in the right direction of what's the best bedroom size. And then at the same time, just because the data says, man, you should go buy in Nashville, we don't stop there. We look, okay, is it better to own on the north side, the east side, the south side, the west side? Is all the revenue the same? Is more money made on the east side of town? Great, let's go buy on the east side of town. So you can go look at where all that money is made when you have all those data inputs. And that's just like our funnel. So when we start making our buy box, it's okay, what markets do we want to invest in? Okay, what kind of product should we go after? What geographic area in particular in this town is best? Then we'll go into, okay, what does that home need to look like? Can you get away with in the mountains? Can you get away with drywall, or does it have to be tongue and groove log siding only? Some markets you must have log cabin only to win. There's a couple markets, which I won't reveal, but you can have drywall and still compete from a revenue standpoint. Those are great things to know to understand what to buy, because if tongue and groove is $100,000 more to buy on the purchase price, but I can buy a drywall-esque home and still get similar revenue, I'm going to go save the money and buy that. So when you can start really getting those inputs down, that's how we build our buy box. But I always say our buy box comes to us. We don't go after and build it. It really builds itself when you just look at the data and you just simplify it down.
Yeah, I would love to keep talking about that, but we're going to run long on time there. But let's talk a little bit about an investor. Say I got $100,000 and I want to invest. Give me a breakdown of what that looks like for me as an investor.
Yep. We have opportunities for investors to come in, pool their money together. So it's 25K minimum. Once you come in, we do quarterly dividends. So we'll obviously pool that money, use it to buy properties, renovate them, design them, furnish them, and then we'll start splitting the cash flows. And obviously that's where those quarterly dividends come in. High level, we plan on holding these for the next 4 to 5 years and stabilizing them. Once they're at that point where, okay, we've got a strong rental history, we've been delivering good quarterly dividends to investors. Now we want to start pooling these together, because that's where the ultimate value is at scale. We want to pool them together and sell it to a larger private equity firm who's going to buy all of the yield that's spit out. Right now, when you really think about it, compared to any real estate asset class, if you want to write a $25 or $50 million check and get instant exposure to short-term rentals, you can't do it. You could do that in multifamily. You could do it in industrial, self-storage, if you really want to go into office right now, et cetera. But what you can't do is that. So if we build it large enough, and we've talked to some of these shops, is they don't get out of bed for anything less than 25 million. If they can't write a $25 or $50 million check, like, it's not even worth them looking at. So now if you can come in with $50 million worth of cash flowing short-term rentals with a 2, 3, 4 year rental history, and then you're just going to get a premium for this, because, hey, they're not going to get out of bed and buy a $500K home, renovate it, add the miniature golf. Like, but if I say, hey, here's 30 of those mixed with these other ones and these, and then you can hand it over on a platter. So for us, that's our plan, is continue to raise money, buy those individual properties, and then again, pool them all together so that you can ultimately have that exit plate to sell. For us, it's a target 4 to 5 year hold with our investors, and then ultimately unload in the next 4 to 5 years.
So if I want to put $100,000 in, am I buying a individual property, or am I into a fund that's buying all these properties, and what's my return?
Yep. So great question. So you are getting a piece of the entire pot. So for you,
Okay.
you're not just overexposed. That's why I would say that the pro and the con to buying your own is you could nail the buy side and get huge upside returns. You could
Yeah.
also flop and lose money. With a huge fund and a pool of 100, 200 short-term rentals is you're not exposed to that. So yes, of course, naturally your upside's capped, but so is your downside, because if one flops, you're still okay because of the rest of them.
Yep.
At the same token, you're not exposed to, say, geographical events. So what I mean by that is if you own your one Airbnb in Miami and a hurricane comes in and wipes you out and you're offline for 3 months, 4 months, you're done. But having, again, our exposure across 8 different states, like I told you, we diversify with bedroom count. So we own 1 bedrooms all the way up to 6. If we only bought 1 bedrooms, we might be competing against hotels. What if
Mhm.
business travel slows down? What if couples stop traveling? If we only bought 6 bedrooms, it's, oof, what if families stop traveling? So we buy that spectrum to continue to diversify and de-risk the opportunity. And then at the same token, the last one is the style. By that is we own lake properties, we own beach properties, we own mountain properties, and we own downtown metropolitan. So for us, it gives you that full spectrum so that we're not overexposed. People don't like going to the beach anymore. Crap, we only own beach properties, we're screwed. Or, oh, people hate going to the mountains now. When you own that diversification, just gives you that opportunity. As far as returns and everything like that, happy to let you talk to our investor relations team. They can get into the weeds based on your check size, your opportunities that we have. Because we have so many different opportunities for investors to get in, you can get yourself a different return based on the opportunity that you would like to get involved with.
Love that. Before we end, one of the most interesting Airbnb short-term rental stories I've got, beside the one of staying in a place that had oily, nasty old rags. On one of them that we own here in Kansas City, actually, when we first put this one online, I got a phone call from a company, a recording company, something. They wanted to record a sex film in our Airbnb. Very interesting. I was shocked. It was like the second week we had ever listened. This was a couple of years back. And I was like, what the hell is this? What Airbnb is all about? Like, whatever. What is your most interesting story, most crazy thing you guys have run into with all your Airbnbs?
We had a neighbor call and say, hey, somebody's got a flamethrower. They're like, no, what? Come again? So we go we put Ring cameras on the outside. You're not allowed to put them on the inside. Full disclosure, we're not going to put
Thank
rules, but
God.
so we look at the outside Ring camera, and sure as hell, there's a guest standing on the stairs because it was like a 2-level home on the top balcony with a like hazmat flamethrower, Elon Musk-esque thing, just like going like this. And so, of course, if you're above the fence line on the second floor, the neighbors can see it. It's above them. So just talk about guests just doing something stupid. That was completely wild. We ended up having to go talk to the neighbor, get that sorted, talk to them, let them know that they are violating the rules and that is not allowed, and handle that. But yeah, that was a pretty wild one that we had.
That's awesome. That's
I
something
just,
I see Ryan doing after he has a few beers. You give that guy 2 beers and you don't know what he's going to do.
I just wish I was in the group chat of the group of guys that, hey, should I bring my flamethrower? Oh yeah, that's a good idea.
Yeah, yeah, we'll do it. Yeah, and then after you go pound a couple brewskis, yeah, let's go take it to the balcony of all
The
places.
best time to do it.
Yeah, not just the backyard where maybe nobody else can see it because you're under the fence line. No, let's take it up to the balcony and really make a show out of it. Yeah,
Yes.
people are
That's
not
hilarious.
exactly smart.
Oh,
Well,
that's
hey,
great.
Taylor, that's an awesome story. Where can people find you? We got you on Twitter, and we'll link everything in the description. But where else, if they want information, maybe they want to invest with the company?
Yeah. Personally, I'm over on Twitter at Mr. Jones STRs. I'm trying to get more active on LinkedIn as well. Post content over there. Just Taylor Jones on LinkedIn. And then you can obviously go over to our website, techvestor.com. If you want to request an invite, talk to any of the investor relations team members, they're happy to field a call or a Zoom, answer any questions that you have, go over the portfolio, go over the numbers, go over the data. They have all that at their fingertips for any prospects that would like to see them. Yeah, happy to help out and appreciate you guys having me on today.
Yeah, no, we appreciate you. And if there's anything we can ever do for you, feel free to reach out. Scott, do you have any last minute?
No, Taylor, this was awesome, man. You are an expert in your space. Clearly, you know the numbers like the back of your hand, man. That was impressive. And greatly appreciate you coming on, and looking forward to staying in touch and working together in the future, man.
Sounds great. Appreciate it. Thanks, guys.
Yep. Yeah. And feel free to like and subscribe wherever you listen to podcasts. Please leave us a review. And as always, we'll catch you on the next one.